Hello, Warriors. Let's expect a good week. How are you, Sinatra, Michael Weissman, Bran, James Groom? Hi, Kman, AJ, Ryan, Andrew, Patrick, Paul. A Pipalicious December, yes. Ryan Varghese, welcome to F.A.C.E.
Good
Okay,
name.
everyone. Hey,
Good
team,
name.
how are you? How
How
are
you
you?
doing, mate?
I'm glad you're on the line.
Uh-oh.
Remember Friday before we signed off? You were stalking the short side of yen that was up here before Paul. Did you do it?
No, no,
Okay.
didn't do it. I'm still, I'm
Okay.
still, I'm still trying to sit on my hands because I still thought it might be going up after Powell, but it
Yeah.
didn't.
I hear he tried to throw low cold water on it, but the market just ignored that statement.
Yeah,
Uh,
gave it the big
he
fat two
wasn't really
fingers.
dovish. He was a little bit mean, wasn't he,
It was
compared
the, it
to
was the
last
same.
time?
It was the
Same?
same rhetoric. We're not sufficiently restrictive. We could hike again if need be. It was no
Uh,
change, and the market's just, giving it the old.
Ran
We've
with
heard
it.
this all before.
Yeah. Okay. All right. So yeah, AJ's talking about the move in gold and silver, pretty crazy. I think this is an important chart. I know that the 10 years up a little bit. It's hard for me to get bearish down here. Um, just looking at the possibility of a three drive falling wedge. Now, the difference and why I don't have as high confidence in this formation is it's happening from the top. Okay. When you look at the end, I mean, it's coming off, record highs. So it's better when they're at bottoms, rather than just coming off a top. But I still can't uh, ignore what I'm seeing here. So I have a hard time getting short. I think there's a pop here. It sounds unrealistic what it would imply because, wedges can retrace 100%, and I'm anchoring it here, up here at 51 and a half. And, when I think about it, especially after last week, it's hard for me to believe that we could get up to 51 and a half again. Um, anyway, but I wouldn't be short from 46.60.
No, it's 146.30 is the 38.2 fib of the July leg
Okay.
higher.
All right. And we are getting a little pop. Yeah, 10-year after Powell and the TLT made new recovery highs, but I don't know, it's up 6 bips today. TLT see, made a new high. I thought we had topped here. So here we are at 93. It's called only 30 points lower. So why don't we move to Europe? Euro was the only one that took it on the chin last week. The way, especially the way Aussie held up, until today, it made a new high. I don't think cable did. No. Okay, so where's your head at on these? And also, we talked about how Canada, when the dollar was strong Thursday, couldn't even rally, and then they really slammed Canada too. What should we be doing with the dollar here?
Rolling with the data. We know
Yeah,
we know the market's taking a dovish slant, so it's going to have to take some real strong data to turn that around. So
yeah.
any decent data is likely to be a rally sell in the dollar and yields, so bond buying, because the market's got its bone and it's not going to let go. And if it is softer data, it just adds to more fuel to the fire.
Okay. I'm looking at this, and I'm going to keep, since it was the weakest, um, I don't think I'm going to have a chance to buy Aussie, at 64 and a half anymore. But Euro, I'm looking at 107.50 as a
Yeah,
buy
you might
point.
get it. You
Yeah.
might get it.
So, if I have confidence about where the Euro might go, but I might want to do something else, like, when the Euro's down here, I'll see where the Aussie is at and probably buy it
Yeah.
since it has a lot of relative strength compared to euro, at least last week. Commodity currencies still look to be my preferred longs, and Canada preferred short on rallies. So there's an opportunity. I know guys that aren't looking for a lot on this dollar recovery. I thought we might get 105, but most of the stuff I've seen is, 104.20, just a bit over 104 for this being a 4, and then we get one more shot down, probably towards, 100, something like that, 101. So my expectations for where I was going to be able to sell the dollar, at least on this cycle, is not. I don't think we get to 105 anymore. What do you guys think? Let me bring in the one and only Kman. What are you thinking there,
Good
brother?
morning.
Good morning.
Good morning, everybody.
Good morning. So, what are you thinking going into this week? We got through the end of month flows. New
Yeah,
month, new month.
yeah. I think the month is really starting today. Probably on Friday we had some leftovers or new or counterbalancing or leftovers of month end. On a Friday, the market decided to hammer the dollar a bit more. Yeah, I think for people who want to buy dollars, if you assume that or sell dollars, sorry, if you assume that it's going to be a dollar rally sell, whatever happens this week, is probably euro is probably not your best vehicle, because I think euro got a bit of a slap around the ears on the back of that lower CPI, probably forcing the ECB to let go of the last hawkish tendency that they may have. So you may want to
Where
look.
would you? Where I know you'd follow it and
Yeah.
trade it. Where would you look to buy? Where are some of your important levels in the Aussie if you want to give it away?
Yeah, we have Aussie, we have the RBA out, yeah, the next night.
Oh,
Yeah,
yeah.
that trend line there, which comes in around 66, 60, still 65. We had a pop
Oh,
above, but we never had any daily close above. So that's going to be my top side level that I watch. But if you want to buy, if you want to sell dollars into strength and buy Aussie, either it's going to be around 65, 75, 80 or low 65, 65, 10, depending on how the RBA behaves.
maybe this high, which we got
That
that
there
big
around,
dip,
yeah.
or this high.
If you're looking at buying Aussie,
Yeah,
yeah, I'm still a bit short euro dollar, and I bought a small dollar Swiss, but just a starter to on the back of the lower CPI. They're thinking that finally S&B may let go a little bit. So that's basically what I'm looking at the start of this week. The rest is really as it comes. We don't know about the data tomorrow. ISM services is the final reading, I think, but still maybe a bit of a mover. Then we have like a load of job reports out of the US, and they are going to be important, right? It's going to tell the market whether they can continue to buy bonds, hammer the dollar, buy risk, buy stocks, and that's going to be really what kicks off December then, ahead of the FOMC. Yeah, I I'm no, the Canadian dollar is a bit of a strange one, because the labor report was good, but then you have like all those all the energy is coming off really fast, especially oils.
yeah.
And that's weighing a little bit on the Canada right now. So ahead of the Bank of Canada, I'm just a tiny bit long cat, but nothing really that's going to change a lot in my book, at least.
You think we could
Um,
have a rally back to like 6.5 or 7, K-Man?
it can, because we are on a relatively decent level, just around and sub 135.
Yeah, I had that
If
thick blue line up there. I don't know why. I leave.
that's
Sometimes you put lines, huh?
probably because you're worth it, Dale, to put that line there.
I don't know.
No, it is. It is a bit of.
at
It
the
is a
time
bit of support. It is
at the
actually a bit
time
of
I put
support.
it in there, it must have meant something to me, or I
Hmm.
had a good buzz on.
Yeah.
So anyway,
Well, look
that
where
being
your
so,
weekly comes in, huh?
yeah, yeah. So that could be a nice short.
Mm. There's a couple of those currencies now. If you look at your weekly dollar cat, where it is, the 50 there, right? It's around
Yeah,
135, just below. Uh,
right.
it, but and then we have the same thing on the Aussie. We have not too far on the Kiwi either. We've got cable that tried above, but we've got the 127.20 waiting there. There's a few levels. There's a few
Okay.
interesting levels going in on the dollar pairs going into this week, which I reckon may be at the start at least, or at the end perhaps, may really become a dollar week again. Yeah,
Yeah. As
but I
far
think
as risk, go ahead.
euro should be perhaps through the crosses also find rally sellers, because I'm looking at the euro to be a bit fragile, and that's going to mess up. I reckon people looking at the Dixie because it's more than 50%. That could be
Right.
a bit of a mess.
Yeah, so they may miss things like Aussie and
Yeah, exactly.
crosses and cable and
Mm,
yeah, because they're just paying attention to the euro, which is the
yeah.
Dixie almost. Regarding risk, I know we got above 4,600 on Friday, which Blake said we would get there at the beginning of last week. And Blake, yes, gold can make new historic highs.
Yeah,
Uh,
I mean, we good morning, guys. I mean, we should probably
yeah,
talk about the two elephants in the room. We have gold that just absolutely just smashed higher, taking out every stop. Anybody who was short is obviously got cleaned out,
yeah,
and then you got Bitcoin that's almost at 42,000, and
yeah,
it's at almost at the 50% retracement of the all-time highs to the most recent lows. I mean, we've seen this. This is a pretty big move. And
yeah.
I wanted to
What's a
ask.
message of gold and Bitcoin performing like this? What do you think? Is there any message
Yeah, the message is
about the
don't be
market?
short.
Okay, that's a good message. So I
I don't
think you
know.
can be short things like Google, even though we rallied. Netflix rolled over as well last week. There's a weekly, so I'm just looking at the Mag 7,
Yeah,
and
I mean,
here's
we finally
Meta.
hit that 4,600 level in the S&P, Dale, and
There's
now
Meta.
I'm very nervous about being long any risk at this point.
Yeah,
So
I think we get that thing Jack was talking about this week. So anyway, go ahead, take it away, Blake, and talk about this. The silver actually is, I know it's a long way till the close, but looks like a key reversal off of last night's action.
yeah, actually, just looking around, there's a lot of stuff. Well, first of all, I want to say good morning and happy Monday to you guys. Ryan, Kman, and you too, Dale. Obviously, happy Monday. Hope you guys had a good weekend. So you were talking. Let's start with the Aussie. One of the things about the Aussie, we hit a new high, dragged higher by gold, dragged higher by copper. But relative strength is very divergent. You can see the highs here. Look at relative strength intraday, very divergent relative strength. And obviously that couldn't last. Now we do have the RBA, as Kman mentioned a little bit earlier. One of the things about the RBA is we can't forget that Michelle Bullock, the new RBA governor, she has been very hawkish in all of her speeches. Then last week, we had year over year inflation instead of at 5.2% came in at 4.9%. I believe that was the number. And so it's going to be really interesting to hear the tone of the RBA collectively versus the just from the central bank head. And the Aussies at risk because you had this reversal that you're seeing in gold. You did see this reversal in silver, Dale, as you pointed out. So I think that we're going to have, and then, I should mention copper. Look at the copper market. We gapped higher. And now we're back at the 200 DMA, which is, all of these markets look like they just squeeze the hell, like the last shorts out and have reversed. So, Ryan, what was your explanation on the flow show on the move higher in gold overnight? Was it the Israeli bombings in Lebanon? Is that it?
Nope. It wasn't the attacks on the US Navy ships. It wasn't Fed-Pow suddenly being less hawkish. It was a pure stop run, low liquidity time of day. It literally opened, smashed it, came back down under the level, and is now holding under the level. Typical.
And that's scary when shit like that happens in the market, because
there's nothing you can do about it. Nothing.
There's nothing you can. Nothing.
Maybe the plunge protection team. I've heard guys like Roman and other guys say that they come in and they were big sellers of oil futures when they were higher and they were able to drag it down. That's when there were government shutdowns. Why can't the plunge protection team, not like gold heading towards 2,200, come in and short gold?
Well, I mean, maybe, but all I want to say here is that that's scary when these moves happen. Just as you pointed out, Ryan, that clears out a lot of the market, and then it leaves the market vulnerable. So
I mean, the key thing is you look at what else happened. Silver went a little bit, but if it was a attack on attack on US ships, near the Middle East, you would have seen oil go up, and it didn't. You would have seen other risk assets move. You didn't. It was a bit of an outlier, and that's when you experience says if that's going and nothing else is going, it's a one-off move there.
Would you call it a false breakout now?
Well, yeah, because we're holding back below the level, and that's
back
key
under what, like
2050,
75. That multi-year, or that triple, quadruple top, whatever you want to call it. Big old resistance area, going to have a lot of stops parked behind it, and someone decided to have a crack at it.
And then it went viral and uncontrollable. I think they're still trying to figure out which trades are valid and which are not with all their clients. I mean, it's purely people who walk in. The machines are doing it. The machines, they don't have a how shall I say it? They are not wondering whether it's too high or not to pay up. They just pay the next liquidity, and that's it. I'm actually wanting to erase that candle from the chart.
Yeah,
it's like when sometimes you have a flash crash. We've seen those in sterling. We've seen those in sterling last year. We've seen them in yen a couple of times.
So how do you do that, Kman? You put some white out on your screen?
Yeah, exactly.
Just educate the public here. When you don't like a wick, how you get rid of it.
It's there. The move happened, but it's just it's a move which should never have happened.
Right, and you look at every data feed, and it's going to give you the same wick. And so here's the kicker for me. I actually want to be short gold this morning. Now, that doesn't mean I'm going to run out and start doing it right now, but I do want to be short gold. I love it when the market gets cleaned out. Any direction. I don't care. It doesn't matter what market. This is where trading becomes universal. Doesn't matter what asset class you're trading. You could be trading, gold. You could be trading, some individual stock. You could be trading, horse manure. I don't give a shit. Whatever you're trading. This is when the market has just been cleaned out. You look for a break back below a breakout point, which in this case is 2050, and we start trading below 2050, I'm going to get short gold and then put my stops maybe 30 pips higher or something like that. That is, and I'm not saying that's going to happen today. It may not happen today, but that's what I'm going to be looking for. So if you guys come to the F.A.C.E show looking for actionable ideas, I just gave you one, because that's exactly what I'm going to be looking for today on any reversal. And like I said, I love them. Give them to me all day long. If I could trade just these, and find opportunities like this every day, I would take it. Unfortunately, we just don't get these every day, but this is something that stands out pretty clear to me. Also, it's happening on a week ahead of the jobs report. We have, Kman, you mentioned earlier, yeah, this week is going to be a really important week. We talked about it on the week ahead video, if you guys didn't watch it. Obviously, it's not just, the jobs report. We have JOLTS, we have ADP, we have weekly unemployment claims. We have a lot leading up to the big kahuna on Friday. But look at some of the key levels that have been respected across the FX space. So you got the euro that rejected at the 618 retracement. Again, this is the big, end of month, dollar weakness. We got, that big story, but it reversed at the end of the week and we saw dollar strength. Now, if the euro breaks back below 108.30, these lows right here, you can see these little spike lows here. We start breaking below 108.30. If I was long euros, I don't think I'd want to be long euros anymore. You got sterling struggling up here at the long-term 618 retracement. You got the Aussie showing failure at the 618 retracement and channel resistance. And you got copper back at the 200 DMA this morning. You have the Kiwi also rallying right into the resistance zone, right into resistance here. You have the dollar CAD that just hit 161% extension. Kman, you mentioned it's back at the 200 DMA. Yeah, I mean, it's, finding finally some support, after, some crude oil volatility last week. Even the dollar Swiss, finding some support around the 78% retracement. You even have currencies like the US dollar Swedish krona that's starting to develop an inverted head and shoulder pattern, following last week. And then you got the dollar yen, which Dale, you pointed out, I don't even know what to do with the dollar yen here. It was the easy trade last week or a week before last when it was trading up at 150. Now I'm really unsure what to do with it. But you pointed out that it's got a little bit of a wedge, which, yeah, these are great when you are in a downtrend, but we're in an uptrend. So I like you, I'm not really too sure what to do with it either. But all in all, you take the dollar index. The one thing that we have to be respectful of is that we did rally to the 618 retracement. Now, my opinion is if we get back above the 200 DMA this week, this is one of those you don't want to be short the dollar, because then the dollar,
What would it measure? You just had the measurement up there. If we got through that black line.
Well, I guess you could look at it like this, and this is the way I'm viewing it in my mind anyway, is that you have this inverted head and shoulder pattern that looks like this, and it's complex. So therefore we could come down here before seeing a reversal. If we get back above 103.50, right back above that black line, if you want to call it that, then you have a measured move that takes us back to probably about 106, 105 and change, I guess, roughly. Depends where the neckline's at and how far we dip. So it depends if it's a true, complex head and shoulder pattern with a deeper right shoulder that comes in around the 618 retracement, then it's going to take us about to 105. If it's not so much and it ends up being more like a triangle, then we're, trading up to 105.50, I guess. So something like that, I guess, is what we're staring at.
Thank you.
Yeah. So that's, and I know, Dale, you are, very much looking for a dollar short on any rally, which I don't disagree with. I think what we're going to have to we're going to have to be looking at is, when you're looking at the S&P and you're looking at the markets up here, this is where I start to really question being short dollars, especially if we see stocks give it up at the end of the month, which is entirely possible. And I had this conversation on the week ahead video, and I'd love to have it with you guys because I don't know the answer. And this is where I'm going to be a little bit more unclear and because I'm just not sure. I don't know how the market is going to take the jobs report this week. There are a lot of times that you can go through a jobs report and you can say, well, the way the market's positioned and how the market's viewing monetary policy. If we get a strong jobs report, the market's going to go do this, and if we get a weak jobs report, we're going to do this. I could actually argue that the market's going to rally on either or. So you get a strong jobs report, and a lot of people might say, well, we're going to get this situation where we're going to avoid a recession, we're going to have a soft landing, so we're going to rally, and because we already know that the Fed's just going to leave rates unchanged anyway, and they're going to keep rates here for a long time. Flip side is we get a weak jobs report, and the market rallies because the market feels that the Fed will start cutting rates sooner rather than later, and they'll feel that Waller, Bostic, Bowman, and Powell all are singing the same tune. So we're going to get a rate cut soon. Let's buy stocks. So I don't have a good feeling on what the jobs report is going to do this week and how the market's going to take it. Ryan, what's your opinion here?
Yeah, I think it's going to need to be an outlier number either side. We're expecting 180k. So if it comes in, 100 to 250, something like that, whatever, the market's not going to be that fussed. But if it's a big number like a 400 or 500k gain, or a negative, minus 150, 100, 200, then the market's going to move and readjust, its Fed expectations for next week. But anything in the middle, I think the market does nothing.
Okay. Kman, what are your thoughts here?
Sorry, I was just reading Stelios' comment about what, Blake?
Oh, okay. Jobs report, strong jobs report, weak jobs report. Is it going to move the needle as far as stock? I think stocks will go higher on either. That doesn't matter. It doesn't matter what we get.
Stocks could perhaps, but yields may paint a different story. We had that famous example a month ago, right, in November, where we had a good report, yet the whole thing started to reverse right there and then. It is possible. We are December, the window dressing and everything, but I say that the majority of the move in the yields, at least, or the bond market right now, is done. So yes, if we have a bad report, then they're going to hammer the yields and the dollar. If we do have a good report, I can see some stabilizing effect, and perhaps the US yields creeping back up a little bit, which then would perhaps make the picture a bit more difficult to read for the dollar. But yeah, I mean, if we get a good report, I see the yields creep up a little bit, and which should perhaps be good for the dollar, even with a higher equity market.
Yeah. Okay. Well, it's going to be, we're going to get early indications of this, obviously, on, I think it's Tuesday. Tomorrow we get the JOLTS report. So once we get the JOLTS report and ADP out of the way, I think we're going to get a better feeling on how the market's going to respond to a weak report or a strong report.
I don't think the market will like a strong report, Blake.
Well, the other thing is we should get a fairly strong jobs report coming off the UAW strikes and everything. So it should keep the jobs market fairly well supported, I would think. And plus you got some holiday hiring that's been going on. So I'm not expecting.
I got a gig at Home Depot.
I'm sorry.
Go ahead. Go ahead.
Go ahead. We're talking at the same time. Go ahead.
Oh no, go ahead, man.
No, now I want to know what you were saying.
It was just a joke.
Oh, I missed it. Damn, I ruined the joke.
It's okay.
I'm so sorry.
I'll do it again some other time.
Okay. All right. Other thing I wanted to talk about, first of all, I want to congratulate our youngest team member who has he traded with me at my desk even when he was in high school. He has he's on the ForexAnalytix team. He's behind the scenes. He passed his second TF trader funding program account, and he was long Bitcoin. And look at Bitcoin, coming into
nice
45,000 or 42,000, the 50% retracement. Big move out of Bitcoin. ahead of the ETF announcements that are expected this week. So, and I think they might be coming out sometime like literally here at the beginning of this week. So, I tried to promote your
Nico,
yeah.
doesn't seem to work, seem to have declined.
How come I can't? I've always been able to do it.
I don't understand Zoom, Dale, but
Yeah.
Steve, if you're here, let me see if
Oh,
I
there we
think
go.
he just
Yep.
did it.
there he
He
did.
just-
Okay.
All
So
right.
There we
hey,
go.
guys, I'm gonna pass it over to Dale. I just want to say it's gonna be a busy week this week. Make sure you guys are all around and being engaged in the markets. I try to explain this to our traders throughout the course of the just during our private sessions with the ForexAnalytix folks. Trading is not like riding a bike. It takes time to re-engage and figure out the macro backdrop. What are the drivers, the correlations that are in play, the ones that have dropped off. So it's important, even if you're not trading like very actively, to be engaged in the markets, because when things move and you're unprepared, you're going to be the one that's stuck, at the end of the line in FOMO, and you're going to be reacting late. And in this business, that doesn't work. In this business, it's us before them. It's us getting in before the other traders out there. So
Let me give you one, Blake. To be there for the good times, you have to be there all the time.
And I tweeted something similar to that a couple weeks ago, where I'm like, you have to be around for the boring times to be around for the good times. And that's so true, Dale. It's so true. So for those of you that are like, kind of been sleeping the last couple of weeks, it makes sense. The market hasn't done much, but now's the time to be re-engaged, because in December, I'm expecting some pretty good volatility. So Kman,
Historic
Ryan,
moves.
Yep. Dale, it's all back to you.
Thank
Thank
you.
you guys.
Cheers, guys.
Okay, hey team, thank you, Ryan. Thank you, Kman. Thank you, Blake. Welcome back to F.A.C.E, Steve Miller. How are you, buddy? Believe you're unmuted.
I'm
now.
here. I think I'm here.
Okay, hey. Great to have you back, Steve.
Yeah, thanks. Good to be back.
Yeah, some historic stuff going on. And
absolutely, this is a lot of things that we're going to remember for a long time going on right now.
Yeah, market memories. So why don't you take it away with what you're seeing now? Maybe you start with the spike we've had in gold. I bet your service was long gold.
Well, we were very positive on gold and silver specifically.
You want to share your screen, bro?
Yeah, I'll share the screen. Let me switch
Just such
over.
nice technical work. Always great to see it.
You want to start with gold. So you should be seeing the gold charts coming up here.
There they are.
Okay, great.
All right.
So just a little bit of a primer for people that haven't seen our work before. You're looking at cycle analysis, which I have studied for the last 49 years. My 50th year anniversary, by the way, as a trader, when I started on the CBOE, will be on May 20th of this year. So 50 years, if you could believe that.
Yeah. Are you starting to get the hang of it?
Yeah, it's though they do make me learn new things all of the time. It's not, you can't sit back and say you know it.
Yeah, you can't. You always have to be learning and looking for the edge, and
right. So let's start out.
Go ahead.
Let's start out with the weekly cyclical patterns here on the gold market. First of all, if I look at a bigger picture, this period that we're looking at here in the gold market, that is, let me just get the pointers up here.
Was that the handle of the cup?
Well, I don't really look so much of this as a cup and handle as if as I look at this from 2020 all the way through 2023 as a massive consolidation.
Okay.
And now if I just look at these last cycles right in here, you can see on the bottom, these cycle brackets are pointing to the energies or rhythms in the market. This silver one, this is silver here, where the important bottoms came with gold and silver. And then we got into these rising phases right over here that you see. So we were positive on the gold market. And then when it started to break above the resistances, we were very positive. This right over here is our reversal scout. Once the momentum turns up on the weekly chart, it tells us there's a high probability that we're safely in these rising energetic phases. Now you can see we moved up.
Yeah, that kicked in with the dollar breaking down on this.
Yes, very much so. And we were looking for the dollar to come down also. So that all was in sync, because we were also looking for a decline in interest rates. So that, all of that really lined up well. Now you have this, of course, this bar is this week, which is just overnight in here. I heard somebody saying about these tails don't matter. I've been trading long enough, and especially cycle analysis and candlesticks, to tell you that the tails do matter, and that you can pretty much measure off of them. And often when you get a move like this isn't like a flash crash or an inverted flash crash. Yeah. This is just simply a short covering spike that got it through, and two important levels. But based on everything I look at, it's going to get there again. So, and beyond that, I'm really looking for much higher prices. This is our projections up here to 2,200 and 2,300 by the middle of next year. In the gold market, I think the patterns are fantastic. When you look at this minor pattern right over here, which calls for a pullback into the early part of 2024. So this says that December could be sloppy right in here. And you see that note there, the ideal trough for the daily chart is on the middle of January, about 115. If I go to the daily chart, you could see that right over here. This cycle points to 115. These yellow areas are where there are energetic selling or outflows of cash. And you could see this has really fought the ability to get any correction compared to these other ones. This is what we call the swamped or right-hand translation. And what it means is that the highest probability is once this little corrective period is over with, it's going to go up again. So the probabilities of getting above that level are over 70%. That's this morning's high, about 2150. And this next target up there is around 2187. Now,
let me ask you this, Steve. If we get this sloppy December into mid-January, it's not going to be a deep price tracing.
No, I mean, support's right over here. Back to the weekly are about 2025. That's our projection down. It's not very far from here.
Right.
And I think that is a screaming buy for short-term traders. Longer-term traders, the consolidation could be a little bit longer, though I don't think it's going to be very much deeper. So the gold market, I think, is in great shape. I've been also very positive in silver, and personally, I've been accumulating gold and silver for the whole last year. And then a few weeks ago, I piled into the silver miners. So I just think that it's
like Fortuna. Fortuna really acted great.
No, SIL, yeah, but they're all looking great. But I bought SIL and SILJ.
Oh, okay. Got it. Yeah. All right.
So this gold pattern is just looking absolutely fantastic. The silver pattern, I won't spend a lot of time on because it's pretty much like you're looking at gold, except for the fact that, gold's at an all-time high and silver's at the 50% level from the all-time high. So
yeah, what does that say to you?
Well, it says to me that at some point, right now you're at about 80-1 on the ratio. And if you can make a case for lower interest rates stimulating the economy, and that's the case for the reason the stock market's going up, then how do you not make a case for silver and copper? I mean, you can't make a case for one and not make a case for the other. So in the meantime, our silver projection is up into this area of around 2740 into the early to middle part of next year in the silver market. And you can see this minor pattern over here is a lot like we have in gold, maybe a few days down in here and then up again to that level that we made this morning. So that's why I tell you that I think that those wicks that it left there are at very least going to get tested on the upside in gold and silver.
Okay. And pretty shallow retracement, you think? Like
Yeah, that's what I mean.
24.37,
Silver market right now looks like
23 and a half would be
25.30, 25.38 is the
Yeah.
short-term support.
Oh, okay.
Yeah.
All right. But it could it also follow the time pattern towards mid-January, like gold?
Well, well, that's the same thing. You see, here's the gold cycle rhythm right
Yeah.
there, and this is the silver one, and that points to the third week of January. So, I mean, it would basically look like a test and then coming down into the third week of January,
Got it.
and then getting into this area on the weekly chart where it's moving up again into that Feb extension area, the blue area. So
Yeah, a lot of people are saying 27 is the big level for a breakout.
Yeah, I mean, I have it as a resistance level of around 27.35, 27.45. So, I mean, that's an upside projection for me right now.
Are you a believer in this bond bottom, and are they completing something up here, Steve, where they might pull back halfway?
Well, I mean,
TLT.
well, I'm going to look at TNX because it's pretty
Okay.
hard not to get a good sense for interest rates when you look at this.
Right.
If you look at the rhythms here on the weekly chart, they're phenomenal. We were projecting down to 424 yield.
Yeah,
Once we made the peak in here, so we got there. Now there is an extreme at around 406 yield. You see that right there?
Uh-huh.
So that's the possibility. The low right over here points to the first week in January is the timing on this. You could see momentum here when it turned negative. I mean, it was very clear. This is our reversal scout right there. And you know, you got to get down over here for the next few weeks potentially. There is a potential. Now, this is very important because you see this on the weekly chart. You see this on the weekly chart that it looks like it has time out here to the early to midpoint in January. But if I look at the daily chart right over here, which the cycle patterns are beautiful, you can see right here that
we're right there.
We're at a bottom. So what you do is you get a temporary bottom, you get a rally. These resistance levels are around 4.54% to 4.63%. You see the note here, buy Treasury futures?
Yeah.
Because when it gets into this resistance, then we expect it to move down again into this period down into mid-January. So we're looking for a short-term rally and the point to buy futures again for a short-term trade with yields then moving back down below that level with a potential of 4.06 yield right there. So, I mean, if you look at it on the TLT, I'm not sure I have the TLT updated on here. Yeah, it's up.
We got the drift.
Pretty close, but you get in here that we're still expecting the rally into TLT out over here into this January period. But then here's the shocker. I think that yields are going to explode again after that. And we could see yields go from 4% back up to the high 4s or maybe even 5% again.
Well, you show TLT peaking right here and then pulling back towards 88. Isn't it? Aren't we right around time and price for correction?
We're right around the time and price, I'm sorry, for the correction right from this level. And then
and up again.
And then up again. So if it's let me just get this pointer here so I stop with that mess. This support here could get down to about, I'm thinking I have it drawn too deeply in here. And it, you know, supports here around 89-ish, and then moving up again. So this rally here on the daily is the same as this extension up here on the weekly. Then you get the below in interest rates, you get the peak in futures. So, you know, this is where I said buy futures right over here, where you get that bounce in yields, and you get that one more trade up over here on the weekly and the daily chart in the TLT. Next question.
How do you keep a positive mental attitude when you're in a drawdown?
Oh, well, you know what? I have a great video out there on about managing your slumps.
Okay. And tell us a little bit about it, because, you know, not everyone is maybe performs as well as you do. And I know you've had your times in the past where you've had to live through it. And, you know, when we talk about the charts, I say this, Steve, it's great to make a nice call, better to make a nice trade, and the best thing is a great hold.
Yeah.
But much easier to put out analysis and just, you know where things are going to go than trading. Because in trading, you could be a day early and it could screw you up.
Yeah. Well, I've
So,
actually coached traders for about the last 27 years.
yeah,
And I don't even do that anymore because I'm so busy with my business.
Yeah.
But
me neither. Yeah,
the key is that is to understand that when you're in a slump, the reason the slump extends has got nothing to do with the markets or trading at all. You know, it's all about personal
your head.
issues. You know, because what happens to traders is that, and believe me, 50 years as a trader right now, I've had my share of very dramatic slumps, and I had a lot of personal growth periods I had to go through to learn how to mature and to survive those periods. Some of them were barely survivable for me. And the reason for me and the reason for most traders is that they ask trading to solve life issues or promises
Wow.
that they've made, paying bills, or the amount of money they're supposed to be making based on what their agreement is with their spouse or partner or business partner or whoever it might be. So once they start to perform poorly, those aspects of life start to come into the trading. And they have to, you know, when you have a bad trade, all of a sudden it means that, well, you know, I'm not going to be able to pay those bills, or I'm going to have to hide something from my partner or spouse. Or so a lot of people have that issue where they hide their results. And what happens is that the success of trading, or the fact that you're extending out a slump, it just bleeds into your real life. The trading contaminates your life contaminates trading. And until you get to the point where you can isolate those, where you can separate those, where you can be honest with where you are in your trading and life, you're going to keep struggling. You have to really be able to be on plan. You know, it's process versus money. And it's life issues versus trading plan and plan issues. You can't let those things bleed into each other. Once you really solve that and really hold on to what your truths are, in other words, you can't let a bad trade say, I can't pay my kids' college bills. You have to say, I'm in a bad spot. I'm going to sit back and I'm going to wait for the higher probabilities. I'm going to focus on my trading plan. I'm going to manage my risk rewards. There's so many aspects to it that get traders in trouble that they can't see when they're in that fog, when their emotions are flooding them, that it's important to step back, see where you are, get back on your plan, own up to the money that you've lost, be honest with yourself, your partner, your family, whoever it is. And then you really get a clean, fresh start. You can get out of that, heavy emotional period and get back into a very positive period where you can
it can ruin you
markets.
if you don't get a handle on it. It could ruin you, can't it?
Yes, absolutely. If you don't, because what happens to a lot of traders that fail is that they get into a place of so low confidence that they can never really see their way into tweaking their trading plan, into raising the money that they need to be successful, into making sure that they have outside funds that can pay their bills, and that it's not dependent on trading, and that every trade is not contaminated by
life or
whether
death.
or not they can do those handle those life issues.
Yeah, so the key is to get to trading as it's just another trade and next.
That's correct. And that it's managed like a business. I mean, every day you come to your business when you trade, especially if you're trading as where it's your career, it's your job. People that, come in with low amount of funds and are just trying to learn or doing it as a hobby or for fun, they have a very, very low probability of success. it can't be done as a hobby or for fun. You know, if you want to do that, give your money to a fund manager that at least has experience and can, you know, handle the money on longer term. But the trading is very serious.
Steve, I tell you what, that was worth so many pearls of wisdom that people should listen to this again. And
yeah, they should, you know, go to my,
grip
I
on
have
it.
over 500 videos on my site, of which at least 250 of them are evergreen on things I've done on trading or trading psychology or the trading plans and technical things. I have 80 different technical videos. So there's so much they can learn by going on there because I've shared so much of my experience.
I was wondering if I could experience your trading psychiatry by being on a couch in your office.
Well, I have not. I have actually stopped doing that right now.
I know.
I have 1 hour one-offs that I do with people at times.
Yeah,
But basically, it's I did so much coaching for such a long period of time that when I started
takes a
to
lot
really,
of patience.
yeah, when I started, well, you know, I'm okay with that, but you know, you move on to different areas of your life, and I'm trying to write a trading book, which is just massive amount of work, and
That's really tough.
you know, so
But
it's
worth it.
yeah, so it's
All the things you have to force yourself to do are usually worth it.
yeah, that's
right?
true. I expect to finish that in the next year or so.
So why don't we wrap it up with your view on risk and what you foresee since we're heading into a new year?
Yeah, well,
kind
I
of get a
mean,
macro look at what you're thinking in SPYs or
yeah, well, I'll put
NASDAQ.
up the S&P 500 right here, which
Okay.
you should see there.
Got
And
it.
if you remember, the last time we spoke was in August. I was bearish, and I thought the market would decline into potentially late October, early November.
Yeah.
And we had an absolutely perfect cyclical low there. The timing was just fantastic, as you could see.
Yeah.
So I think, and if you go back and watch my year-end view from last year, which is on YouTube in 2 parts, I believed that we were in a cyclical bull market that is living within a secular bear market. Nothing has changed in my view in that at all. I still think that we're in a cyclical bull market that's going to peak with potentially the Dow making all-time highs, but the other indexes not, or testing them at best. And that the reason for that, I think, is because I think there's going to be a huge rotation as we get into next year.
Out of the MAG 7?
Yes, because they are now at historic levels of the percentage of the S&P, far, far beyond that of the .com period at the end of, you know, right around 2000. The highest tech stocks valuations were 22% of the S&P then, and they're 29% of the S&P now.
Yeah.
There's a massive over-owning
concentration is unbelievable.
Yeah, and they're gonna, that money is gonna come out of there, and that's going to help the stock market hold up, I think, during this period. You can see my projection for the S&P 500 really at a best case is around 4750 to this level here on the fib extension 4780. There is a potential that right now it's going to peak and then begin to come down. But the short-term patterns are very positive. When I look at this now, our momentum conditions are very strong. You can see our slim ribbon PO on the bottom giving an upward momentum signal there. This formation is super strong. So it points to a little bit of a pullback over the next several days and then moving up again. And then this period where it corrects out into the mid-period of January. Interesting, mid-period of January is very important on all of the cycles that I look at. So it's an important period. But I'm thinking this area. Now, our projection, 4706, it was amazing that it got through there. We thought it could stop at 4,500, but if it got through there, 4706 was the next level. And now this morning, it's going to pull back pretty sharply. So I think that, you know, based on the macro environment, I think that they're wrong on the level of interest rates that are coming down now. And I think we're going to get into a period where interest rates firm again next year. That's probably going to be a period where there's some corrective action that we see going on in the metals also, and where we get a bounce in the dollar. But in my opinion, the dollar still has lots of issues. So I still think the dollar, up, other than the period where I think in the beginning of the year where interest rates are going to pop again, I think that's the only time that the dollar can do well. I think there is a massive flow out of fiat right now. I think fiat, the reflection of that are real assets and real money. And I think commodity markets are going to have big move next year on the upside. And that's going to be a problem for the Fed because they're in a doom loop, because they cannot get out of what they've done. Because if the markets and the economy turns down, they're going to cut interest rates, and commodities and metals are going to soar.
Fly.
Right. So
you think the plunge protection team was in there shorting gold last night?
No, I mean, the gold move was a short covering burp that got up through important levels. The same thing for Bitcoin, because Bitcoin, we were projecting 4,200,
42 grand. Yeah.
42,000. Sorry.
What's the message? I'll ask you this: the message of Bitcoin and gold and silver doing what they're doing. What's the market telling you? What's the message from that?
The message is that the central banks around the world have completely ruined us. That with 100 years since the Jekyll Island and buying power of the dollar down over 98%, that's reflected in the price of metals, certainly in gold. And you think anything is changing right now? It's not. So we're looking at continued decline in fiat until the fiat is over with. I mean, if you look at the relationship between the Swissy, which is now only about 7% gold, and the rest of the currencies, it just shows you how much of a demand there is for some sanity in the money markets. So that's why I think gold could easily be 3,000 in the next 5 years. I think we're in for a period where the chaos.
How about long-term targets for Dixie, and we'll wrap it there. I've seen, I could come up with like 85 if it's 1.618 of the first 1,400 point move last year from the recent 107 high. I've seen people have numbers in the 50s long-term for the dollar.
Well, I'm just going to look here at the weekly patterns right here, which you can see the rhythmic consistency in there. And right now, my projection is around in the 99, 98 area, sometime mid next year. Now, long-term patterns are far from breakdowns, in my opinion. So the long-term monthly pattern support is at around 99.65. That shows you the importance of this period right now. If we can get down to that 99.65 area during this period that looks weak out into the second to third quarter, first to second quarter of next year, it's going to be over for the dollar. This is a very important period for the dollar. Supports, you can see, got here on the minor cycle.
Yeah, that says 61.8 back right there.
That says that it's likely, this is the 61.8 back, exactly. This is the 78.6 here. Remember I said that I think early part of the year, interest rates are going to go up and it's going to surprise people. That's this rally in the dollar right here. But once this fails and then starts to come down again, if it gets down to that area, right down to this low, I'm just going to duplicate that right there because that's the monthly bottom also. That will be the end of the dollar. This is such an important time period coming into April, May of next year.
Yeah, that was a graveyard save down there at 99 when they broke down prior. And then we had this 50% rally. Right. Yeah, you've been bearish a dollar, Steve, so I'm concerned about it too. It's great. I wrap it with this last question. It's great to make money and be successful. have a nice size account, have wealth. I don't know if you're still comfortable with banks, but what about the big picture? When you come right down to it, is it going to matter if you know, they try and change our currency to a CBDC, and you know, there's some rough times everywhere?
Well, I think I think if they, I think there's enough sane people out there that will prevent the digital currency here in the U.S.
Well,
You know,
God, I
because
hope so.
massive loss of privacy if that happens.
Yeah, it's
And
over. Or
yeah,
yeah.
right. So I actually don't believe they're going to be able to do that, or maybe not in my lifetime, which hopefully has got a couple decades left to it. But I think they're not going to be able to do that. And if anything, I think cryptocurrency is going to have a crash. So because you can't have unlimited amount of anything able to be created, and I don't want to hear the bull crap about 21 million Bitcoin available. They can create all they want, the variances of that, and with over 20,000 different digital currencies, cryptocurrencies out there, and always being created. There's no limit. So
Bitcoin is not the new gold.
Bitcoin
AKA
is not
Steve
it
Slim
is
Miller.
It is
okay,
not.
Ben. That's a great way to close the show. Best
Right.
way for people to follow you, partner?
Just go to my website, askslim.com. There's lots of ways that they can watch us, what we do for free. And there are 4 different membership levels for premium, for active traders, in currency, in indexes, currencies, anything that they may be trading. We have analysis on it. We have 4 people on our analytical team that are phenomenal. AskSlim.com.
Steve, I'm so glad our paths crossed. I'm grateful to Twitter, I mean X, that we met.
Yeah, right. All right. Thanks for having me. Looking
Well,
forward to next time.
have some great holidays, Steve. Appreciate it, my trading warrior brother. Very
All right.
giving nature you have. Thank you.
Thank you. Appreciate that. Bye-bye.
All right, that's a wrap, everyone. You could join the team in 14 minutes on the Morning Edge. Hope you enjoyed that. You know, we do record these. If you want to listen to anything, we have an archive of over 6 years of great interviews, if I must say so myself. Well, probably well over 1,000 there. You know, and there's pretty timeless, and you could go back and see what people were thinking a year ago, and then, you know, might give you a good laugh too. Anyway, just thought in case, in case you get bored, that you could just go back and look at all these interviews. I'll see you, Steve. Thanks again, buddy.
Bye-bye.
All right. And that's a wrap. Don't just count your pips, count your blessings. Adios.